Hey, what's up, guys? You got Crypto Chuck back here with the group Crypto Black. Hope you guys are having a great day. Hope you guys like some of those games. Happy Hump Day, baby. And the story I'm gonna bring you guys today is great, especially what's going on with crypto, what's going on with the markets. We just seen Mnuchin talk about he don't see the whereas they're gonna reach a deal on the um, stimulus bill until after the election. So, guys, it's something to think about. You guys have to start thinking about investing, not just saving. Okay, and where you able to take your money and make more money from it. So, but before we get into all of that, let's look at the market currently right now. So we see market cap is at $358 billion, 24-hour volume is at $71.13 billion. BTC dominance is 58.7%. And we're gonna look at Bitcoin right now. Bitcoin, we still between that support and resistance lines right here that we got, guys. Like I said, once we got past 10.6, that seems going over 11,100. We're currently resting right now at 11,298. So you really don't see too much of we rested right on this 7-day moving average as well. So I think we're doing pretty fine right now. We had a lot of news come out, a lot of good bullish news coming out. So I think it's gonna be great. I see we should test 11.8. We got rejected at 11.7 yesterday. So the next step is at 11.8. When we get past 11.8, I can see it's getting well over to 12,000 very quickly, actually. So once we touch 11.8, I see it getting to 12,000 quickly. So, and that's just my opinion. It's no financial advice. But volume is it's not really too high, not too much of a selling pressure there. But that's just my opinion. And guys, let's get right into it. As you guys can see here, $2 trillion asset manager Fidelity just released its latest Bitcoin report. Now it says, along with offering a branch provided Bitcoin custody and trade execution for its clients that own trillions of dollars, Fidelity Investment has involved itself in the crypto asset space by providing the industry with regular reports and surveys. Now, these reports and surveys cover what role Bitcoin has on Wall Street, which has historically shy away from this historic technology. Now, a recent report published earlier this year, for instance, for that a majority of American and European institutional investors in surveyed find at least something interesting about digital assets. Now, the report has revealed that a double-digit percentage of institutions already own Bitcoin and Ethereum in some capacity. Now, on October the 13th, the company released its latest cryptocurrency report highlighting Bitcoin's role as an alternative investment and portfolio optimization tool. Now, this piece was a part of a larger group of documents by Fidelity that is trying to give Wall Street investors a thesis of owning Bitcoin. Now, it's a Fidelity survey with the alternative investment of Bitcoin. So, Fidelity found that unlike what recent trends would suggest, Bitcoin has extremely uncorrelated on a rolling 30-day basis with other markets like U.S. stocks, high yield bonds, REITs, that's real estate investment trust, guys, gold, and emerging metric. As to whether or not these trends will continue, they found that the short-term correlations we see between gold and Bitcoin stocks and Bitcoin, what the hell was that? Between gold and Bitcoin and stocks and Bitcoin break down over longer time horizons. Not to mention, Bitcoin is a retail-driven phenomenon, which is vastly different from the trends that drive almost all other major markets. The retail base of investors that BTC has, which preach investment strategies like hodling, may allow BTC to continue to deviate from other markets. Now it says most recent survey, 60% of investors who believe digital assets belong in portfolios said they should be considered alongside other alternatives. Is our new report here from Fidelity. It says, on top of all of this, the $2 trillion asset manager found that hypothetical traditional portfolios with 1 to 3% in Bitcoin actually had improved returns and Sharpe ratios than those without BTC, which we all know that as well. I think it said about 60 to 80% of people that's holding BTC is actually up. Can't say it about everybody else. So it says, this is a fact that has been known for many years, but such a notable company throwing its weight behind the idea adds credibility to it. Now, Bitcoin fundamentals are relatively shielded from the economic impact of the COVID-19 pandemic. Bitcoin is also unique in that it continues to be influenced by retail investment sentiment and can capitalize on the shift in the way retail investors interact with traditional markets and consume financial information, as well as a transfer of wealth to the millennial generation over the next 10 years. What people don't understand is it's going to be trillions of dollars being transferred over to millennials in the coming decades. And who are the biggest champions and the biggest cheerleaders for crypto? It's millennials. So where you think a lot of that money that's going to come from that transfer of wealth, where do you think it's going to go to? People not going to be buying stocks and bonds and everything. People going to be buying more in the crypto, buying more in the Bitcoin. And what do you think what's going to happen to the price? So it's something to think about. It's not get rich quick right now. It's the long game, the long money game. You know what I'm saying? So it says the points mentioned in this report are reminiscent of those mentioned by fintech giant Square when it revealed last week that it had purchased $50 million worth of Bitcoin for hedging purposes. You guys want to know about that? We did a video on that as well. Check that out. All right. The purchase absorbed 1% of assets on Square's balance sheet. Now, more reasons than ever to own Bitcoin. The report highlights that there is a trend of an increasing number of fundamental reasons to own Bitcoin, especially by institutional actors that need to hedge downside and reach certain return targets. As reported by Cyberslate previously, fund manager Andrew Kane explained that with Bitcoin volatility dropping, yields falling in other markets, inflation coming amongst other trends, BTC is making increasing sense to own by Wall Street. And that's the truth. You know what I'm saying? See, what you got to understand is these money management companies have problems, right? Their problem is if they hold in $2 trillion, they have a $2 trillion problem. A $2 trillion problem is that every dollar they hold in, those investors want returns on those investments, and they don't want their investment to go down. So you got to understand they're going to want to get into investments that's been making money over time. Now, Bitcoin has a 10-year history, we have a decade history of showing, listen, we're not only outpacing traditional markets, we're superseding, we're leaving them way behind. All right? It's like a race, like somebody racing from New York to California. You know, most of these equities, they're in Pennsylvania, and Bitcoin is in Arizona. You know what I'm saying? So you got to understand what's going on, and they're going to start looking to other ways to actually start getting people more money, especially with a lot of these and we'll go over that in another video, a lot of these banks and stuff with negative interest rates and everything around the world, and super low interest rates here in the US. So people are going to want to start putting their money to where they can actually, especially when the market, if the market starts tanking, you have a big tank in the market. And we've seen who came back harder, who came back fast, who came back harder. Everything dumped, right? Back in March. And who came back, and who's still top dog right now in all the markets? Who had the biggest comeback, the highest comeback? It was Bitcoin. So you got a lot of these money management companies, they're going to want to start putting money in investments into what's pretty much have been the sure thing. What has been coming back faster? What's going to come back better? Because I'm putting it like this. If one money management company is not doing it with Bitcoin and they're not making money, they refuse to get into the space, another will, right? And we're seeing a lot of institutions start to bring in money. And people are going to start moving their money over here. And what's going to happen to that money management company that is not, that, you know, what's going to happen to their clientele? They're going to start leaving, and then all of a sudden they ain't got no money to manage. They're out of business. All right. So people want to start going and start following the herd. That's just how it is. But guys, let me know what you think about this right here. Let me know what you think about my opinion. You think I'm right or you think I'm wrong? All right. But we do see a lot of institutions starting to come in. Retail is, they're driving crypto right now. But at the same time, guys, we're still fresh. Crypto only been around for a little over a decade now, and it's still fresh. We're still early pioneers, guys, and it's a great time to be in crypto right now. But let me know what you think about this video. Guys, make sure you like, share, and subscribe to the channel. If you're brand new to cryptocurrency, go on our website, www.cryptoblack.net. The website and everything is right below in the description box, and you're able to take the course to learn about cryptocurrency. And it's a beginner's course. It's going to put you 1 to 2 years ahead of everyone else that's just starting out in cryptocurrency. And I suggest you take the course if you haven't done so already. And it's going to save you a lot of headaches, guys. It's going to save you a lot of money. I know actually not one, but I know a lot of people actually. But let's just say I know this one lady recently, she lost a few $100 and she didn't know how to send cryptocurrency. Could have took the course for $75 and actually would have saved a few $100, and the investment she wanted to buy actually went up like 20%. So not only she lost the money when she tried to send it, like a few $100, she lost out on the actual investment. So that's just something to think about, guys. The gains from the investment, 20%. That's just something to think about, guys. So remember, education is expensive. Well, that's not even expensive, $75. But but being uneducated will cost you a lot of money and cost you opportunities. All right. So I'll see you guys in the next video. Make sure you guys stack your sats and chill. It's your guy Crypto Chuck here with the group Crypto Black. We out of here, baby. Peace.